Hi guys, so in this video we're gonna do exactly what the thumbnail and title says, right? We're gonna look at ADA, Cardano, and see what it holds for the future, right? So the thing with ADA right now is it's at a very volatile point in its cycle, right? So, and what I mean by that is there is a hard fork that is coming, which is a major news event. It's called the Vasil upgrade, and I will link the article in the description and you can check it out. You can read all about it, right? So there is somewhat like the ETH merge, if you think about it, right? So ADA is also going to move to something similar to that, and that is going to introduce volatility into the markets. And what I wanted to highlight over here is the fact that most of these news events, right, all of it is bullshit. Yep, that's right. So nothing can hide price action, right? Like it always shows direction. But what people have done here, what the market makers have done here is actually quite smart. They've built up liquidity on both ways, right? They've induced trader into both longs and shorts so that it's their playing field basically. So all major news events, right, may it be the CPI, right, or the FOMC meetings, all major events are just cover-ups for the market makers to introduce volatility into the market. So when retail traders go back, they think, oh, this pump or dump is because of the news event, right? It had nothing to do with price action. It was due to the news event. So, and that is a wrong way of thinking about it. So us as traders, we can look past all the noise, and there is a very clear direction. There is a clear trade that I'm seeing on ADA, right? So first of all, let's look at liquidity on both ways. And how do we introduce liquidity on both ways? We look for major orders like this, right? Now as a retail trader, somebody might be tempted to think this is support, right? It plays into the support and resistance theory, but no. So these are equal lows, right? So that's your equal low 1, and that's your second equal low. So what this basically does is whenever there's equal lows, right, so it is very likely to get swept. And when I say swept, what I mean is it is very likely that something like this will happen and it reverses. So it is a very likely point of interest where price might be attracted to, because you have to understand that to create such an order, right, so this one wick extended 20%, and assuming ADA is worth like $10 billion, right, the market cap which is in circulation, so 20% of that would be $2 billion. So just think about the monumental amount of money that is required to move that much wick, right? So when you see wicks like these, it's market makers getting their entries in, and more often than not they would have taken profit long ago. So they would have taken profit somewhere over here and somewhere over here. So what is left right now is these quote unquote support to induce traders into long at this area to liquidate them, right? So we'll call this our equal low 1, and let's make it red to indicate sell side. So that is red. And then we have, previously there were equal lows over here that I had alerts on, and that just rang, so it just recently got swept. But this was our like equal lows that form. And now let's look at the equal highs, right? So you can clearly see there's induced equal highs over here, and you can see that there's equal highs over here, right? So this is a very clear indication of what the market is gonna do. So previously it was either and yeah, let's just mark this out as well because they're relatively equal. Let's mark this out as lows. So how you identify it, right? Usually there would only be liquidity on one side, which the market makers would take and reverse the market. But when it comes to these news events, right, it tends to be a bit different. So there's liquidity build up on both ways. So even if you are a smart money or like a smart trader, right, you'd still be a bit confused. And the best way to look at this, right, when you see something like this, the best way to go about it is to look at, or rather wait for the market makers to show their hand, right? You don't have to do the heavy lifting, you just have to watch, right? So what are these key levels and what do they mean? So as we know, whenever you sweep a key level, you tend to reverse. So when liquidity is taken on this side, you hit an order block and you tend to take the liquidity on the other side. Or if liquidity is taken on this side, you tend to hit an order block and liquidity is taken on the other side, right? That's how it works. So you wait for the market makers to show their hand once this upgrade happens. And I want you to read about the upgrade and when it is and all that jazz. So basically what you want to do is wait for them to show their hand. Don't get baited, don't get tempted to jump into a trade just because you can, right? Wait for a sweep of one of these levels. And if you observe, I've set alerts. You can see the little alert sign over here. I've set alerts for both of these equal highs. Now you may be asking me, why haven't I set them to equal lows? So my conviction here, or my bias rather, is that we're gonna go up first and then down, right? And let me show you why that is. And before we actually do that, I want you guys to set alerts at these key levels as well. So I want you to set an alert here, mark out these equal highs on your charts, set an alert, and mark out these equal highs and set an alert. And once you've done that, you can let me know by going into the comments and typing alert. So it also helps out the algorithm, right? And at this point, I just want to remind you guys that 60% of you aren't subscribed, but a lot of you are returning and watching my videos, right? So just subscribe so that I can deliver this content directly into your inbox rather than you having to look for it, right? So I want you to set alerts at these key levels on your trading view. Go to the daily time frame, set alerts on these key levels, and let me know in the comments if you did. And I will now show you why I think it is more likely that we are going to go down rather than up. So first of all, major market structure, right? On the daily time frame, it is very clearly down, and we haven't really filled in this block of volume yet. We're still above it. So that is one thing. And next thing, if you just turn on the VPVR, right, you'll see that, and here is where it gets interesting. So right, if you look above, if we just zoom out a bit, if you look at the volume levels, right, this is a high volume node. And if you observe, before this chunk of price action, if we go back to somewhere like there, right, there was not any volume over here. And volume came to be created because there was not volume over there. And this is what the market makers do. They tend to take price to areas where there isn't much volume so that they can fill up orders before doing something else. And if you're like me, what you can clearly see over here is the lack of volume over here. And when I say over here, let me just mark it out. So let's get our brush tool and look here, there is barely any volume, right? So you have a high volume node over here where you're at right now, and you have a POC and a high volume node at the bottom, right? But in midst of all of that, there is no volume pretty much. So, and if you observe this is why the market makers are really sneaky. These equal lows, right, they have been below this high volume node. So if you observe, these equal lows formed over here. Look where I'm pointing. Let me get my brush. These equal lows formed over here where there is already no volume, right? So that is what I mean by baiting retail into thinking that is support, right? Whereas it's not. It's already wicked below all this volume that was previously built. So it is fair game for the market makers to take price completely down back to this area of volume where there would be orders, since there is volume, right? So do you understand? Now playing that into the entire theory, right? So it is more, now that we've decided that it is more likely that price will go back to this area to fill out volume and gather more orders. How do we know when it's time to short, right? I personally, and this is why I asked you guys to set the alerts at these levels, I am looking for price to break this. So let me just annotate that. So I'm looking for price to break these equal highs, then these equal highs, right? And then when there is a change in market structure, right, it should be over here. When there is a change in market structure to the downside after taking this liquidity, that is when I will go short. And you guys might be thinking now, okay, that's cool, I understand, but where would you take profit, right? So this is going to be a bit of a longer term thing. So it's going to be a swing trade rather than a scalp, which is mainly what I do. The first one would obviously be at these equal lows, assuming we don't take them before going down. So assuming we get a short on a sweep of these highs, right, I'd want to take my first profit here, okay, and then my second take profit would be over here, and then finally the third one, which is the very long term one, it would be all the way here, right? This is where volume starts to pick up again, or somewhere over here. So I would short that, and this is my plan for ADA for the coming couple of months, and maybe early into next year as well, right? It's a long-term thing. So, and how the news event plays into this is, when news event comes, right, it is very, very likely that it introduces volatility, because the market makers, they look at news events and they think, okay, this is an excuse for us to introduce volatility in the markets without being suspicious, right? So I am looking at this news event to take out these highs for price to range above this, then finally take these, bait retail into going long before finally going short. So that's my plan for ADA, and I want you guys to chart this out as well and really think about it, right? So if you've enjoyed the video so far, and if you found value in this, make sure you like, comment what you think about it, and also subscribe so that I can deliver more quality content to your inbox regularly, right? Thank you guys. Bye.